look at these 8 cities and figure out if any of them are aligned with you, if you could build a good team there. You know, one of my favorite cities on this list, it is the most expensive, but it has year-over-year price growth still at 11%, which is the second best on the list, and it is the fastest population growth. Most people here probably know, if they're paying attention, that the Federal Reserve has been raising interest rates, mortgage rates have followed, and we have seen mortgage rates more than double from the beginning of 2022 until where we are today in February of 2023. Real estate investing is the best asset class to pursue financial freedom. But after years of crazy appreciation and mortgage rates more than doubling since last year, it has become really unaffordable in a lot of markets. But the good thing for real estate investors is that not every market behaves the same. One city might be really expensive while the other is more affordable. And yes, despite the headlines and all the crazy appreciation, there are still really good, affordable markets for real estate investors to get into real estate right now. So that's what we're going to talk about today. I did a whole analysis, I crunched the data, and what I found was 8 great markets that are not only affordable, but have great fundamentals for real estate investing, and we're going to get into that today. Hey, what's going on, everyone? My name is Dave Meyer. I'm the Vice President of Data and Analytics, and every other week going forward, I am going to be presenting new market information on the BiggerPockets YouTube channel. Videos just like this where I show you 8 great affordable markets. We might talk about cash flow markets. We're going to go deep dives on individual locations. That's every other Saturday on the BiggerPockets YouTube channel. So if you want to check these things out and get to understand not just which markets are doing best, but learn how I analyze different markets so you can do it for yourself, make sure to subscribe to the BiggerPockets YouTube channel and set up those notifications so you don't miss any videos. With that, let's jump into our topic for today, which is our 8 most affordable markets to invest in 2023. Before I name those 8 markets, I do just want to talk for a second about how we even got here in the first place. And I know that everyone knows that the housing market has gone crazy over the last couple of years, but for a while it remained really affordable. Even during 2020 and 2021, as prices were going up, it was still relatively affordable in a historical context. And that's because affordability in the housing market is not just about housing prices. It actually has 3 different variables. Housing prices, of course, how expensive a home obviously impacts affordability. The second one is mortgage rates. Because more than 80% of people who buy a home use some sort of loan, the entire industry is really interest rate sensitive. And so when interest rates are super low, like they were during 2020, 2021, and the beginning of 2022, things stayed affordable despite home prices going up because interest rates were so low. The third thing is wage growth, basically how much income a person has, and that has been growing over the last couple of years, but not fast enough to keep up with inflation or the pace of price appreciation in the housing market. Basically, what has gone on over the last couple of years is in 2020 and 2021, housing prices were going up, but the fact that the Federal Reserve kept their federal funds rate so low, and because mortgage rates were so low, it sort of masked this whole affordability issue that was coming up. Basically, people could continue buying for those 2 years because mortgage rates were so low. Now, most people here probably know, if they're paying attention, that the Federal Reserve has been raising interest rates, mortgage rates have followed, and we have seen mortgage rates more than double from the beginning of 2022 until where we are today in February of 2023. So that basically pulled the veil off. No longer can the increase in housing prices be masked by low interest rates, and now we're sort of facing this big affordability issue. There are a lot of ways to measure affordability in the United States, but let me just tell you that the way that I track it is now at a 40-year low. So affordability in the United States has not been this low since the 1980s. As I said at the beginning of the show, this is on a national level. I am talking about national averages here, which is really just the aggregation, like the accumulation of all the different individual housing markets across the country. Looking at it on a national level is helpful to understanding some macroeconomic trends, but as an investor, it's not really that helpful. What you need to understand is where are markets where you can actually afford it. So I went through all of the BiggerPockets data, I have census data, other public and private information, and figured out the top 8 markets that are the most affordable. If you're curious, basically, I tried to create a simple methodology so that everyone could understand how I came up with these markets, and you can conduct a similar analysis for yourself if you want to do this. So, number one criteria was that the city had to have a median home price lower than the national average. Right now, it's about $400,000 for the US. It depends who you ask, but it's about $400,000 median across the US. So any market that is on this list had to have a median home price lower than $400,000. Number two is that the city basically just had to be large enough to have good economic prospects and reliable data. There were probably other great, small, affordable markets. I didn't include those here because I need good national, really good, reliable data about population growth, economic growth, jobs that I can look at. And so for that reason, I looked at the 100 biggest metro areas in the US. Number three is I wanted to make sure that there was population growth in any of these cities. I only looked at 2021 to 2022. If you wanted to do this differently, you can. You could look back even further. But basically, I took census data and I said, I want to see markets where the population is growing, because although there are a lot of macroeconomic conditions you should be looking at before you actually go make some sort of investment, the one thing I like to do just to screen some markets is understand what's going on with population. People are leaving an area, it's likely that home prices are going to be stagnant or could even go backwards. People are going, that means there's more demand, that can push up demand for rent, for housing, and that could increase prices. Those are relatively good things for an investor. That's number three. Number four is that it had to have a rent-to-price ratio, which is a proxy for cash flow. It helps you understand, can you make cash flowing deals in the city? It had to be above 0.6%. And I know a lot of people are probably familiar with the 1% rule, which says that any deal you do should have a rent-to-price ratio of 1% or more. I don't personally subscribe to that belief because that rule of thumb was invented back in 2010 or 2011 when the market was very, very different. If you can find it, you should still go get it. And personally, I still wouldn't do a deal with a 0.6 rent to price ratio. But when I'm screening cities, I'm willing to look at a city that has a 0.6 rent to price ratio because there are probably deals that have 0.8 or 0.9 or even the 1% rule. If I'm looking at the average for the city, the fact that it has a 0.6% average means by rule, because it's the average, that there are deals that have a better rent to price ratio and deals that have a worse rent to price ratio. So when I'm screening cities, I like to look at a broader list of cities. And so I'll increase that. I'll allow for a lower rent to price ratio. If you don't know what a rent price ratio is, again, it's just a proxy for cash flow. You get it by dividing monthly rent by the purchase price of a property. And that helps you understand just at a quick level whether that property or that market is likely to have cash flow. If you're actually going to invest in the market, you really need to do a much more thorough analysis, but this is just a good way to screen them. Altogether, this is a list, the 4 criteria of major metro areas that have a home price below the national average. It has a growing population and a good opportunity for cash flow. So with no further ado, let's get into these 8 markets. The number one market to have, and these aren't really ranked in any particular order, I should say. I just have them in declining order of rent to price ratio. That's how I sorted it in Excel, so that's how we're going to get it. The markets are, number one, Oklahoma City, which has a rent to price ratio of 0.71. And the cheapest city in the entire list with a median sales price of $165,000, which is extremely affordable, right? Even if you put 20% down, you could put that would be about $33,000. Now, not everyone has that, but if you wanted to do a house hack, for example, or an owner-occupied type of investment, you could put 5% down or 10% down, and that could be somewhere between $10,000 and $20,000. So that is a relatively affordable way to get into the market. Oklahoma City has great economic prospects on top of that. It grew 7.6% home prices year over year. Rent has gone up 4% year over year, and population grew 0.7% year over year, which is the second highest on this list. So Oklahoma City, I think it's a really interesting market. It also has huge major industries and good economic diversification. It's got a lot of energy, aviation, biotech, manufacturing jobs, and there are a couple big Fortune 500 companies there like Devon Energy and Love's Travel Stops and Country Store. I didn't know what that was, I'll be honest. And also Chesapeake Energy. So there are big companies there. And I think that's why Oklahoma City is a really interesting market. Second city, Jacksonville, Florida, which has a slightly lower rent to price ratio at 0.69% and has a median sales price of $240,000. Now, I will say the one thing about Jacksonville is that their price growth has really started to flatline, but it's not necessarily going backwards yet, but it hasn't grown as fast as Oklahoma City. Population growth is still great at 0.44% per year. I know that doesn't sound like a lot, 0.44%, but trust me, that is actually a lot. If you're thinking like, oh my God, the best city, the highest rent to price ratio here is 0.7%, take in mind that all of the other cities that had a higher rent to price ratio here had a declining population. So that's just something you should know, is that if you want a market for cash flow, and I made that arbitrary decision that these markets I thought should offer decent cash flow, these are some of the better ones. Otherwise, you're going to be in a market with declining population, which could negatively impact appreciation in the future. Third city, Columbus, Ohio, with a rent to price ratio of 0.7%, just marginally growing population-wise with 0.07%, but the median sale price is still under $200,000 and has really strong rent growth and strong sales growth. Fourth is Orlando, Florida. You'll see a theme on this list that Florida, there are a lot of markets in Florida that meet the criteria that I set out. Relatively more expensive, so I'll just name two of the cities in Florida at the same time. Orlando is one, Tampa is the other. They both have sales prices in the low 300s, so Orlando's at $310,000, Tampa's at $330,000. So those are more expensive on this list. And, I said all of these are affordable, but there is relative scale here, because if you think about Tampa at $330,000, that's nearly double what Oklahoma City was at $165,000. So there's relative scales of affordability even within this list. Orlando looks like a great spot because rent is growing the fastest of any city on this list at 6%. 6% rent growth is phenomenal. Who knows if it's going to continue, but that is really strong growth. Tampa, on the other hand, one of my favorite cities on this list. It is the most expensive, but it has year-over-year price growth still at 11%, which is the second best on the list, and it is the fastest population growth of any city on this list at 0.8%. Next, we got Columbia, South Carolina, which is relatively cheap with $200,000. Sales price is $200,000. Year over year, it has grown 6.5%, and rent is a staggering, of any of them on this list, fastest growing in Columbia, South Carolina, 7.4% year-over-year rent growth, really, really high. And second to last is Greensboro, North Carolina, which is another really cheap city at $250,000. And I know not everyone has money to afford this. I'm saying relatively, $215,000 is about half of the median home price in the US. So relatively speaking, when we're talking about real estate investments, that is relatively cheap. Greensboro stands out on this list because it has a year-over-year sales price of 16%. A lot of markets across the country are cooling down a lot, as we've seen. Orlando was 2.9%, but Greensboro still going strong with 16% appreciation in just the last year, rent growth over 3%, and strong population growth. And then the last city on our list is Kansas City, Missouri, with a rent-to-price ratio of 0.6. Cheap in terms of this list, median sales price of $218,000, and rent growing super strong at almost 4%. If you are going to invest in any of these markets, you need to do a lot more research. You should be really understanding much more macroeconomic trends, like which jobs are moving there, how, population growth, not just on a 1-year basis, but on a 5 and a 10-year basis. You need to be finding the specific areas within each of these markets that are growing the fastest and are best aligned with your personal financial goals and risk tolerance. So my goal here in providing this list is to help you start, right? Look at these 8 cities and figure out if any of them are aligned with you, if you could build a good team there. It is not meant to say like you should go invest in these 8 cities. It's help you narrow down of all of the places in the US. Here are 8 strong cities with good fundamentals that are relatively affordable that you should consider. Hopefully that's really helpful to you. If you like this kind of video, we appreciate a thumbs up, and make sure to subscribe and come back every other Saturday. I'm going to be releasing videos just like this. Hopefully you like them. If you have any ideas for me, feedback for me, you can always hit me up on Instagram where I'm at The Data Deli. Thank you guys so much for watching, and I'll see you on Wednesday for my normal data and news analysis for real estate investors. Thanks again.